Will the standard for Wall Street compensation be changed going forward? It's a huge question. The Obama administration's pay czar will be receiving compensation proposals tomorrow from 7 companies that received U.S. bailouts. Joining us now is an independent compensation consultant, Brian Foley. He's with us in the studio. Brian, thanks so much for coming in. Do you think Ken Feinberg is really the spokesperson of what the Obama administration wants to project, thinks is appropriate as far as pay goes?
Well, he's going to have to be the point guard. Probably in a no-win situation, but he's the guy who's going to take the heat.
So essentially companies have to pay attention to what he says. Wall Street has to pay attention.
I think Wall Street has to pay attention, but they also have to make their case. And it'll be interesting as you look at the different issues. He has lots of power on some issues, not as much power on other issues.
Guaranteed bonuses seem to be one of the sticking points. The fact that some say, they sort of violated, especially obviously the companies that receive money, they violated this idea of taxpayer protection. What kind of language do you think we're going to hear from Feinberg on that subject?
Well, he's going to push back. I think he would prefer no guaranteed bonuses. The problem is that in the competitive market, the people who are not subject to these regulations, foreign banks, for example, can provide guaranteed bonuses. So there's probably going to have to be some room for some type of guaranteed bonus, probably much more stock-based than cash-based. But so I assume he's going to push back hard, won't get everything, will get something.
David, I'm sorry, it's Brian. I'm thinking about our next guest, but that's quite all right, Brian. As you know, the Wall Street Journal reporting today that Andrew Hall, the $100 million man at Citigroup, is going to follow what you just said effectively, or at least he's in talks to maybe get most of that $100 million in equity versus cash. Is that going to be a template for Wall Street?
Well, my understanding of the Wall Street Journal story is that he'll get next year in stock, not this year. And this year's number could be close to 100 million. So that may be a template, but it's an unusual case, and it'll be interesting to see how people on the Hill react to a $100 million package in cash if that goes through.
We have some data here. Bonuses expected to rise between 40 and 50% from last year for some banks in their fixed income divisions. I know I'm being really precise. But do you think that is likely to happen? I mean, that they fall the subsequent year, and if so, by how much?
It's hard to say. Last year was a really low year for many institutions, so coming off a real low, the percentages are not necessarily indicative. But if you look at Goldman, for example, Goldman has bounced back huge, and I would expect the Goldman numbers to be truly robust unless they fall off the cliff in the third and fourth quarter.
So what about, what do you think is the most interesting thing that could come out of these discussions? I mean, what are you looking at as far as where you sit? Well,
I'd like to, it's interesting because Feinberg is sitting there. He's not an executive pay expert. He's not a risk assessment expert or a risk analysis expert. He's a smart lawyer. He's well connected. He's got the bully pulpit behind him. It'll be interesting to see how far he can get in pushing back. And the other thing that's really unknown is what his resources are. Who is advising Feinberg as to what's too much and what's not enough, and what the risk-reward ratio should be? We haven't heard that answer yet.
Because we could say it's hard for people in Washington to understand what it's like to run a competitive business. Right. But the flip side is Wall Street salaries are out of whack, if you want to use that expression, with the rest of America.
Yeah, the ultimate problem here is for some people, any intrusion is too much, and for some people, any bonus is too much. And where are you going to meet somewhere in the middle that produces a compromise that everyone thinks, okay, I can live with that. I gave up something, I got something. And that's, of course, all in the eye of the beholder.
All right, Brian, we thank you very much. Brian Foley, principal at Brian Foley and Company.